Yeah, thank you, Margaret. Good evening, everyone, and welcome to the conference call. From the management team, we have Mr. VP Nandakumar, Managing Director and CEO, Mrs. Bindu, Chief Financial Officer, Mr. Rajavaidyanathan, Managing Director, Ashirwad Microfinance, Mr. Jeevan Das Narayan, Managing Director, Manappuram Home Finance, Mr. K. Senthil Kumar, CEO, Vehicle and Equipment Finance, and Mr. Salil Bawa, Head Investor Relations. We thank the management for providing us the opportunity to host the call, and I'll promptly hand it over to Salil to start off the discussion, and then we'll open it up for Q&A.
Thank you very much, Abhishek.
Yeah.
Good evening, everyone. Thank you for joining our Q4 FY20 results conference call. Apologies for postponing the call by 30 minutes. We didn't want to have a clash with FM's press conference today, so that's why at the last minute we had to shift the time by 30 minutes. Apologies again for the same. During the discussions today, we will be referring to the Q4 FY20 investor presentation uploaded to the exchange and on our website. I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. Would request you all to read the detailed disclaimers in our result document also. With this, I would now like to invite Mr. Nandakumar to begin the proceedings of the call. Over to you, sir. Thank you.
Ladies and gentlemen, welcome to Manappuram Finance Q4 FY20 conference call. Our purpose today is to discuss our Q4 performance. But we meet under the shadow of a global pandemic that has darkened the outlook for all business and the economy. Let me then take this opportunity to put things in a macro perspective as far as Manappuram Finance is concerned. As you know, gold loans have been the dominant share of our company's business mix, accounting for over two-thirds of our total portfolio. Our past experience is that during periods of economic stress, banks generally become risk-averse and go slow on lending. The global financial crisis in 2008-9 was when major economies went into recession and stock markets crashed. But looking back, there was also a period of strong growth for us. As for the lockdown during phase 1, we kept all our offices closed. New customer acquisition came to a halt and collections were affected. However, by focusing on online channels, we kept the momentum going and we were able to restore collections in gold loan even as our branches remain closed. Today, as we near the end of phase 3 of the lockdown, most of our branches are functional. Although customer footfalls are still low because public transport is not there. Recently, the government announced an economic package of 20 trillion to revive Indian economy. Specifically, the loan guarantee scheme of 75,000 crores for NBFCs and MFIs would help in easing the liquidity challenges faced by the NBFC. Both government and RBI are fully committed to do whatever it takes in addressing the challenges of the pandemic. Going forward, we expect demand to rise once restrictions come off and stalled businesses, especially micro and small enterprises, get back on their feet. Coming to our Q4, we have achieved good increase in business volume and profitability despite the impact of COVID-19 in the last month of the quarter. Some of the key performance highlights for Q4 are as follows. Number one, our consolidated AUM has crossed 25,225 crores. Consolidated AUM is up by 29.8% year on year and 4.7% quarter on quarter. Two, gold loan AUM grew by 4.5% on a sequential basis and 30.9% on a year-on-year basis. This growth was driven by a combination of increase in gold holding, which grew by 7.2% year-on-year, and higher gold prices. At the portfolio level, our average LTV is less than 50% against the RBI limit of 75%. Which means most of the customers have a lot of room to borrow more against their existing pledges. Our microfinance subsidiary, Ashirwad Microfinance, reported an AUM of 5,503 crores, an increase of 43.3% year on year and 9.6% quarter on quarter. The strategy focused on quality. Earlier, we had a state-wise cap on lending at 10%. Now we also have in place a district-wise cap of 1% with a directive to reduce that to 0.5% in 3 years' time. At below 5%, Ashirwad has the lowest operational expenses in the industry. Going forward, we expect some short-term pain in our microfinance portfolio after the moratorium. However, based on our experience in dealing with the episodes of stress in the segment, we are much more positive about the medium and long term. India's automobile sector has been facing a slowdown for the last 1 year or so, and our commercial vehicle finance business saw higher GNPAs, aggravated by the lockdown. Our housing portfolio is relatively small and has been steady in terms of asset quality. During the quarter, the company consciously chose to reduce its on-lending portfolio to NBFCs, that is, loan to small NBFCs and MFIs, given the stress in the macro environment. On the liquidity front, we continue to receive funds from all the routes. CP rollovers are continuing. We are getting funds from our banks and AMC partners. The incremental cost of fund today is at 9.4%. On the liability side, we have raised the standalone basis 3,978 crore in Q4 of FY20, with the objective of further diversifying our funding portfolio and bring down the dependence on short-term sources. We do not expect any funding challenges to come in the way of our growth plans, and we are comfortably placed with our ALM, which we monitor very closely. The overall OPEX has come down by 0.22% in Q4 as compared to Q3, mainly due to savings in security costs. We have now set up a committee that will focus exclusively on optimizing costs and bring down the operating expenses further by looking at areas besides security costs. Finally, we are reporting a consolidated quarterly net profit of 392.7 crores for Q4 FY20 and 1,461.8 crore for FY20. And these are the highest profits ever. Thank you. And now it is over to our CFO, Mrs. Bindu, for a detailed look at the numbers.
Thank you very much, sir. And thank you all for attending the call. The company has taken several proactive measures to deal with the impact of COVID, including ensuring adequate liquidity across each entity within the group. Cash and cash equivalents on hand on a consolidated basis was rupees 3,646 crore at the end of March 2020, and the number at the end of April was approximately 2,525 crore and undrawn bank line of another 1,518 crore, improving the ALM position and significantly increasing the duration of our liabilities. The company has taken several cost initiatives that is partly reflected in the OPEX ratio, reducing from 7.64% of AUM during the previous quarter to 6.76% of AUM on standalone basis in the current quarter. OPEX growth is expected to further moderate going forward. We are following a cautious approach to the growth of non-gold book with the soft macro environment. The company has increased the focus on digital collections and customer communications. Let me take you through the earnings update for the quarter that has gone by. Our consolidated AUM for Q4 FY20 was rupees 25,225 crore, up by 29.8% year-on-year and 4.7% Q-on-Q. Consolidated profit after tax after minority interest was rupees 392.7 crore for Q4 FY20, growth of 43% year-on-year. FY20 consolidated PAT stands at rupees 1,461.8 crore. ROE on a consolidated basis was 28.2% and ROA of 5.7% for the quarter ended March 2020. Talking about the gold loan business, which constitutes 67.3% of consolidated AUM, the AUM increased by 30.9% year-on-year and 4.5% Q-on-Q. The gold holding stood at 72.39 tons, and the tonnage increased by 7.2% year-on-year and down by 1.5% Q-on-Q. Gold loan average ticket size and average duration were rupees 38,500 and 58 days respectively. The board has approved a policy on moratorium to the opted-in customers. Most of our gold loan customers have preferred not to opt for moratorium as they realize the deferment of payments without waiver of interest would add to their interest outflow. The total number of gold loan customers stood at 26.23 lakhs. The gold loan book at 16,967 crore. Auctions during the quarter were rupees 15.23 crore. As the lockdown started only from 24th March 2020, we completed the auctions due before lockdown itself. Our weighted average LTV stands at rupees 2,345 per gram or 59% of current gold price. Gold loan disbursements during the quarter at rupees 51,912 crore compared to rupees 40,304 crore in Q3 FY20. The online gold loan book is growing, which accounted for 48% of total gold loans. Coming to microfinance business, Ashirvad grew by 43.3% year-on-year at rupees 5,502.6 crore and delivered 25.5% ROE in FY20. Collections in March 2020, rupees 290 crore was accounted as advance received due to the moratorium offered by Ashirvad, and AM is higher to that extent. As a reminder, Ashirvad's MFI is now amongst the lowest cost providers of microfinance loans in India with a diversified geographical footprint and prudent lending norms. The company is rated AA- stable by CRISIL, the highest credit rating in the MFI sector. For Q4 FY20, the company made a profit of rupees 60.08 crore. We provided 100% for loans due over 90 days, 50% on loans due between 60 to 90 and 10% provision on loans between 1 to 60 days. we provided additional rupees 55.02 crores during Q4 due to COVID-19, which is 1% of total AUM. We also recognized rupees 55.45 crores as income from assignment transaction during the current quarter, which has partly offset the impact of COVID additional provision. The company has a capital adequacy ratio of 25.4%. Coming to vehicle finance, in the business, we have reported an AUM of rupees 1,344 crores, which is down by 3.8% Q-on-Q and up by 20.6% year-on-year. Home loan business had a total book of rupees 629.6 crores, which is up 4.7% Q-on-Q and up by 21.4% year-on-year. It operates from 47 branches and reported a profit of 10.48 crores during FY20. Loan to NBFC is reduced by 13.7% Q-on-Q to rupees 554 crores as we did not disburse any loan during FY20. Loan to SME and others was stood at rupees 227.4 crores. The new businesses contributed 32.7% of consolidated AUM and the remaining 67.3% as gold loans. The total consolidated borrowings stood at rupees 21,817 crores. Our standalone average cost of funds in Q4 has increased to 9.46% from 9.12% in Q3. We raised in Q4 rupees 3,978.8 crores to US bonds 2,128 crores and NCD private placement of 1,350 crores and term loans of 500 crores. As on date, we are having nearly 2,700 crores liquidity. Out of the same, 50% kept as bank fixed deposits and 50% as cash credit lines. Between 1st April to till date, we could raise CPs of rupees 1,375 crores and rupees 100 crores under TLTRO. Provisions and write-offs of the standalone entity during the quarter were rupees 36.96 crores, including additional provision of rupees 14.9 crores due to COVID-19. Our gross NPAs was 0.88% as at the end of quarter compared to 0.5% at the end of Q3 FY20. The company's consolidated net worth stood at rupees 5,745 crores. The capital adequacy at 23.44% and the book value per share stood at rupees 68. Thank you. We can go for questions, Q&A now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Love Sharma from Lombard Odier. Please go ahead.
Hi, thank you. Thanks, Mr. Hindu and Mr. Nandakumar for the call. Just 2 questions from me. So, on the liquidity side, can you provide details about your any maturities for this quarter remaining from here on? I remember, I think there is some amount of cash, working capital lines which are due. So any color on that, how that's been going on? And also, if you can also provide details for the for Q2 requirements for debt maturities. Secondly, for the businesses outside of gold loan, especially the microfinance and the vehicle loans, etc., can you provide details about what are you seeing in terms of the NPL? Given its moratorium now, but what do you expect in terms of the NPL pressure there? Any specific requirement of funding in those businesses, specifically from the parent entity? So those will be very useful. Thank you.
Liquidity.
Yeah. Liquidity, earlier we were having a higher CP percentage, and because of the fundraising in Q4, we could reduce the CP ratios to 11%. Our maturities will be 1,800 crores over 2 months. That is the maturity for CP. But during April, May also we could get the rollover and the new CPs. That is the reason we are able to maintain the same liquidity which is available at the end of the year. And we are getting positive responses with regard to TLTRO. One transaction already completed, and we are working with the banks. And the response is positive. We may get new lines also. The first 2 months slightly slow because of the audit, etc. in banks, but we are expecting sanctions in June. Liquidity wise, I think things are better.
About MFI, Mr. Raja Vidyanathan, MD. Mr. Raja?
Sorry, go ahead. Yeah.
Yes, sir. Well, I thought he was asking about the liquidity position in Ashirvad is very comfortable. We started with about 1,000 crores of liquidity at the beginning of April, and as it stands, we are very comfortable for the next 2 quarters, and we have undrawn balance of about close to 1,200 crores. And in all new schemes, LTROs and the short-term liquidity of SIDBI and NABARD, Ashirvad is always at the top of this receiving of the liquidity because of it's the only AA- company in India in the MFI sector. So we don't foresee any issue in liquidity at all in this company as of now. And I don't think we require any support even from the parent as going forward for the next 2-3 quarters.
NPL process.
Hello. On the NPL, particularly on the non-performing thing, what the biggest difference between earlier times and now this crisis is there is a moratorium which is announced by the government itself, a very thoughtful scheme announced by the government which eased the pressure with the borrowers. And we feel because of this particular measure, the level of losses which the company, which the industry had earlier has been much eased off. Demonetization was a very different story. So we feel it's going to be much under control than what it was earlier. And the company was also very prudentially provided. We have got about another 50 crores we provided now for the additional 1%, 55 crores we provided. And we are sitting pretty with about 100 crores of opening provision against future. Plus, as regards to the RBI, we are again 50 crores more than what RBI requests us to provide. So on all bases, we are quite conservative and well poised to tackle the crisis.
CV Sandil.
Thank you, sir. We do expect some short-term pain for the next couple of months, but going forward, I think vehicle finance space will start looking better. As of March, we have around 10% of our customers who had opted for moratorium, and in fact, in the last 40 days, around 30% of them have come back and said that they are going to pay the EMI, and they have paid. And I'm sure with things opening up in the next couple of weeks, I think these customers who had opted for moratorium will also come back and pay their installments. So I think we don't see any significant pressure. Of course, there will be a short-term pain for next 2 months, but going forward, I don't see any significant pressure on the portfolio in terms of moratorium or NPL.
Okay.
Any other question, Mr. Sharma?
Yeah, sorry. Just a follow-up on the liquidity side. So, if I understood correctly, 1,800 crore is what is pending in terms of the CP repayment over the next 2 months. Is that correct?
Yeah.
Okay, understood.
Yeah.
And how about the
already we got 1,300 crores deals confirmed. So the liquidity position will continue.
Understood. And how about the bank working capital lines, etc.? Because I think that was quite substantial as well.
Yeah, we got 100 crore TLTRO and another 200 crores of working capital limit from banks. And we are working with a few other transactions. So I think it will come because April, because of the lockdown and the audit, normally the sanctions will be less, but the response is positive. So we believe that we will get a few other sanctions in Q1.
Understood. Okay. So no issues in terms of rollover or additional working capital lines from banks?
Right.
Okay. Fair enough. And sorry, just one more question from me. On the moratorium side, can you indicate how many customers, etc., have taken moratorium for the gold loan business?
Gold loan business, very, very few. Yeah. Hardly 5%. Very low. So
5,000 customers, is that?
No, hardly 5%. Yeah. It is very low. Even those opted for a moratorium.
Only 100 customers.
Yeah. It is very, very low. And even those opted for moratorium also are coming forward and redeeming or servicing interest, everything. So this is practically nothing. In CV, out of 1,400 crore portfolio, around 650 crore had opted for moratorium out of 1,400, but some of them are paying even from those opted for moratorium. In housing finance, out of 650 crore of portfolio, around 200 crore, so that's the volume opted for moratorium. So from there also, many customers are paying now. So because they understand the difficulties that interest is accrued on this portfolio. So many customers, when they get the money, when they have the liquidity, they are ready to pay.
Okay, got it. Thank you so much. I'll get back in the queue.
Thank you. The next question is from the line of Parag Jariwala from White Oak Capital. Please go ahead.
Thank you. So I have three questions. One is just a clarification. The moratorium numbers which you have given so far is as on which date? Is it March or April? That's first. Secondly, what is the outlook of growth, particularly gold loan? Because as you highlighted in the opening statement, that banks have turned quite risk averse. And the gold, revenue is like good for the customer in this environment. And thirdly, out of our total branches, what proportion of branches are now fully operational? Thank you.
Yeah. So the figures I have mentioned is as on April.
Okay.
About moratorium.
Okay. And in terms of
growth, after a lockdown for 2-3 weeks, the first reaction would be to redeem the gold. So currently our 90% of the branches are open today, operational today. Yeah. So what happens is the redemption as well as the new pledges, the volume remains more or less the same. Yeah.
So sir, are we on the path? Let's say lockdown related business compulsion ends by June 30th. Then are we on a path to achieve the loan growth guidance as we have been stating for gold as well as other businesses?
Yeah, we hope so.
Okay. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes.
Yeah, thank you very much, sir, for the opportunity. Now, sir, would you, as you mentioned to the last caller, that the loan growth guidance is maintained, kind of. So, FY21, would you like to share any kind of guidance?
So we can't give any guidance, particularly in a situation which is uncertain. But we hope the growth we usually achieve, that is around 10%, 10 to 18%. Yeah.
10% gold loan and overall 15%.
So this year, as 1.5 quarters are lost. The growth could be around, this year's growth could be around 10%.
Including all other businesses, right?
Yeah.
Sure. Thank you. That's it from me.
Yeah.
Thank you. The next question from the line of Shubhanshu Mishra from BOB Capital Markets. Please go ahead.
Hi, sir. Thank you for the opportunity. First, if you can please elaborate on the growth numbers, sir. How do we arrive at this 10% that you're guiding for gold and then microfinance and vehicle, and we also do affordable housing? If you can elaborate on this growth number, it will be very helpful.
So, in non-gold segment, initially our cost will be collection. So, we don't expect any growth in non-gold segment this year. Gold.
So we model in for a 0% growth in other subsidiaries?
Yeah. No substantial growth is expected because initial years we may be focusing more on collection. So there can be some initial reduction in portfolio. So maybe during the last quarter or so, there could be some growth, but that cannot compensate. That will only compensate the reduction that could happen before that. So we don't expect any net growth in the portfolio during the year. Gold loan, what we generally tell the market, we are able to grow around 10 to 18%. That is our usual sort of plan. So it's not a guidance. In fact, it is our usual plan which we used to achieve. So this year, as 1/3 of the year is lost, we expect the balance 2/3 we may be able to grow at 10%. That's our plan.
Sure, sir. And this would be more value-led growth or volume-led growth in gold loan?
Yeah, gold currently is 17,000 crores, maybe in the range of, say, 1,500 to 2,000 crores. That may be that range.
Right.
That's our plan.
Sure, sir. And sir, one thing in terms of a concept, sir, the gold loans are bullet repayment loans, sir. The moratorium is only on the term loans. How can we offer moratorium on gold loans in that case?
See, that's why the gold loan who have sought moratorium is very, very negligible.
No, sir, but can we give moratorium?
Out of 2.6 million customers, the exact number of people who have opted for moratorium is around 100 only.
No, sir, that is not my question. My question is, can we offer moratorium?
See, yes, there is a bullet repayment. Our loan tenure is 3 months.
Right.
Yeah. Some people who may feel some difficulty in redeeming that at that point of time may ask for some moratorium. So the exact figure I have, around 100 people only have opted for the moratorium as far as gold loan is concerned.
Sir, my question is not on the quantum, sir. My question is very conceptual. Can we offer moratorium or can we not offer moratorium on gold loans?
Of course. The option is between the lender and the borrower. That is possible that even the RBI has classified. The second thing, around 61% of our customers are online gold loan customers, OGL customers, who can transact, who are mostly transacting regularly online. So we are able to collect interest also whenever they transact that day. So our accrued interest is only of around 1.5 months. Accrual is there.
Okay.
Yeah. So we are able to collect interest almost periodically.
Okay. Sure, sir. And sir, I wanted to ask about your vehicle loan. Initially, we were in this conversation, we were told 10% of the customers have opted for moratorium, and then you said that 650 crores on a value basis have opted for moratorium. So which number is correct?
Initially, out of 1,400 crore volume, the volume-wise 600 crore should have been under moratorium as per their request. Okay. Now, that is not in practice. As Mr. Sajjal has mentioned earlier, many of the customers, when we asked them about moratorium, initially they said yes, we are opting for moratorium. But at the same time, many of them have paid. That means it was only a caution as far as they were concerned.
Right, sir. So how much of the vehicle finance portfolio is under moratorium as of April, sir?
Yeah.
Yes, sir. I just one small clarity. As sir said, around 650 crores customers, the portfolio was 650 crores. The customers had asked for moratorium. But later on, when we started speaking to them, I think customers realized the impact of the moratorium and they opted out of moratorium. As of March, we have around 10% of the customers who had opted for moratorium. That is around some 130 crores is the figure. And out of these 130 crores, 30% of the customers have come back and paid us. That is it.
So as of April, we have roughly around 90 crores under moratorium. Is that a correct understanding?
Yeah, in the sense, April will be slightly higher because there are customers who opted for 3 months moratorium who moved to 2 months and then who subsequently moved to who have moved to 1 month moratorium. So in that way, customers have come back to us and they have started reducing the number of months which they have requested for moratorium. April, we do have around 100 odd crores who have requested for moratorium now. But we do have customers also come back and say that they have paid the April EMI, so probably they'll opt for a moratorium for 1 month. So probably.
So what is the total value under moratorium for vehicle finance as of
around 130 crores as of now.
130 crores.
Yeah.
Sure, sir. And sir, what are the total provisions we have taken for COVID-19 in each of the businesses, sir?
COVID-19 portfolios?
Yeah. So in Ashirvad we took 1%. In the standalone entity, additional is around 15 crores.
In standalone entity, how much we have taken now?
Additional 15 crores.
And this is largely for the vehicle finance portfolio because we do it in the standalone business, right?
Yeah.
Sure, ma'am. And just one data keeping question, ma'am. If you can please tell me what the auctions are and weighted average LTV in percentage and in rupees.
Okay. Auctions during the quarter, rupees 15 crores. And the weighted average LTV on portfolio 59%.
And in rupees, ma'am?
2,345.
And the accrued interest in
3%.
crores? 3%.
Yeah.
Sure, ma'am. And just one feedback, ma'am. It is a sincere request if you can put out the results much before the call, ma'am. Here we had the call and we got the results like just a minute before it. We have barely punched in the numbers in our model.
Yeah.
And I get the point that there was a finance minister call as well concurrently, but that doesn't stop us from uploading results on the stock exchange.
Yeah, take your point. Definitely, if any further details required, we are available.
Sure.
And next time, definitely, we will address this concern.
Sure, ma'am. Thank you so much.
The branch point noted. Thank you.
Sure.
Thank you. The next question is from the line of Qtr4 from Investors. Please go ahead.
Thanks for the opportunity, sir. Sir, my first question is with respect to auction strategy. Just want to understand, as during the call you mentioned 90% of the branches are operational as of today. What is our strategy of auctioning over the next 3 to 6 months? That is first question. And secondly, related to that, how the gross NPA would move in your view?
The auction strategy is maybe for another 2 months, we may not conduct any auction. What we see, our auction percentage on the dispersal is 0.5% only. So they have headroom to renew the loan, because when the gold price has gone up, there is some headroom. They need not bring the full interest in such cases. So I don't think there will be much to auction. And I don't think the gross NPA to move up drastically in the coming quarters.
Okay, for gold finance business.
Yeah. Initially, in this quarter, there may be some a spike, maybe there some slight spike will be there, but in 1 or 2 quarters it will get flattened and come down.
Okay. Sir, just want to check one number. The cash on cash equivalent as on April is 2,500 crore, which you mentioned. Is that correct number?
Consolidated was around 3,600 crores.
As on April.
No, as on 31st March, and as on 30th April, cash 2,500 crores and another 1,500 crores under online.
Correct. So this usage of around 1,000 crore, is it just because there was a liquidity issues and we have utilized this cash? And in the coming quarters, we plan to increase the liquidity on the balance sheet, or how should we look at it?
Yeah, so as on 31st March, we carried in books because the limit got approved and year-end is important for the lenders also, we availed. But during the quarter, we reduced the carrying cost and we are keeping as under online. That will save the cost.
Okay. And just a last question from my side. What percentage of in post-April, we must have we disbursed any loan in the gold business? And if yes, what percentage of customers came to the branch or the new customer we have seen?
Yes.
So
just a rough sense.
Our total volume.
Disbursement numbers are very high.
We were dispersing around
700
crores every day, even on an average every day, even during the lockdown period. Our branches were closed. As I mentioned, around 60% of the gold loans are online. So many customers were transacting through this online, because we have 2 apps, we have other online facilities, so they were transacting. So the volumes were very, very high. Yeah. Okay.
Sure, sir. Thanks. Thank you.
Thank you. The next question is from the line of Qtr4 from Kotak. Please go ahead.
Yeah, hi. Just one question on the vehicle finance side. If you could help us understand the profile of your customers, because what we understand is that most of the vehicles are on the road, so obviously it's challenging for customers to pay installments, but I guess a very few of your customers are actually opting for moratorium. So I'm just trying to understand, in terms of other vehicles actually on the road, are they paying from their savings, and what exactly is the income profile of your vehicle owners? Thank you.
Yes, sir.
We address the retail side of the portfolio. We don't have much focus on the fleet operators. Our portfolio will consist of one or two vehicle customers. In terms of the repayment capacity, yes, I know they've been, the entire industry is through a stress. But one advantage we have is that since we address the retail end of the portfolio, we don't have customers who really go on a very long haul, or who are running contracts with big industries. In that way, their load movement or the freight movement is very versatile. They can either fly intrastate, or even in our LCV and the SCV portfolio, they'll be flying intracity. So in that way, I feel the retail customers are in a much more advantageous position when compared to the large set of customers. And in terms of, yes, we do have, as of March, only 10% of the customers are opted for moratorium. We have been continuously following up with the customers. We have been in touch with them. In fact, most of our collections, around 60% of our collections, 60 to 70% of our collections are through online mode, either through directly through NASH presentations, or through indigenously developed app through which customer can transfer payment into his accounts. As I said earlier, we do see there will be a short-term pain for next couple of months, till such time all the vehicles are on road and all the lockdown restrictions are removed. But as far as our portfolio is concerned, since we don't have many long-haul routes, I feel we should be back on road once again in next probably within a month or so.
Would you have a rough idea how many of the vehicles are currently on the road?
That's very tough. But having said that, we have been in touch with almost all our customers. We've been in regular touch with customers. We've not, at least in the last 10 days, I would say around 50 to 60% of the customers have started flying vehicle, albeit in a very, probably within a very restricted distance.
And I wish to add one more thing. Out of our 1,400 crore portfolio, around 300 crore portfolio is two-wheelers.
Yes, sir. Right. Understood.
Sure. Got it. Great. Thank you very much, and all the best.
Thank you.
Thank you. The next question is from the line of Qtr4 from DSP Mutual Fund. Please go ahead.
Hi, sorry. I had a couple of questions. You had said that very few percentage of customers are opted for moratoriums, but what is the bounce rate that you see on the EMIs is one question. The second question which is there is, what is the value? You're saying that there's a lot more online transaction, and gold prices have gone up. So is the value per customer going up?
Yeah, regarding gold loan, yes, the gold value is going up. Along with that, the LTV is going up. So currently, the average LTV we have mentioned taken by the customer is only 59% against the regulated cap of 75%. So customers have used only 59% on an average. Yeah. Regarding bounce rate, Senthil, you can answer.
Yes, sir. The bounce rates obviously it has gone up. On overall portfolio, the bounce rate is around 44 to 45% is what we have seen in the last couple of cycles. But I said earlier, our team has been in touch with the customers, and we try to almost on once in 2 days basis, and we try to recover this amount. And if you compare to pre-COVID, yes, the bounce rate has gone up by almost around 18 to 20% is what it has gone up.
So during a lockdown period, out of the billing, our collections in the vehicle portfolio is around 45%.
Okay, sir. Thank you. So even the gold also, if you can just quantify this, let's say the average loan per customer, what was it? You gave it an LTV basis, which is also very useful. But the average loan per customer, has it gone up, or it also ties in with the earlier question that somebody asked in terms of, is it going to be volume growth or average loan per customer is going to go up? And that's my last question, sir. Thank you.
So there is no much difference. Yeah, it remains somewhere around 55,000 rupees.
Okay, sir. Thank you. Good luck, sir.
Yeah, thank you.
Thank you. The next question is from the line of Qtr4 from Centrum Broking. Please go ahead.
Thank you for the opportunity, sir. So my first question is in the online gold loan. So when this year maybe we can see lower footfalls in our branches. So any initiatives we are taking to further increase our online gold loan percentage?
Yeah. So before lockdown, the percentage of online customers were around 45%. Now it is 61%. What we have done, we have introduced facilities, apps to convert this non-online gold loan to online gold loan. And many of these customers used that. And because of that, even during the lockdown period itself, the online gold loan out of our total portfolio has gone up by 10-12%. So it is going up, and the people are more accustomed to that, and they love it. So that really helps us in the interest collection. And whenever they have some money in their accounts, they transfer online. So that makes the gold loan asset quality very high. And also there is so much increase in the accrued interest even after 1.5 months lockdown period.
Understood. So in your sense, you expect majority of the disbursals with this year will be through online mode?
We are able to see an increase in of 1% in our total portfolio moving to online. Yeah, 1% per month is moving to online.
1% in terms of value?
Yeah, 1% of the volume.
Volume.
Probably towards the end of this year, 70% of our portfolio would be online.
Understood. Very helpful. And if you can give some color on the OPEX side, what are the line items where we can rationalize OPEX further, and how much scope is there? Even if in qualitative basis, if you can give some color, high scope, low scope, even further savings in OPEX.
Yeah. So a year back or so, around 1.5 years back, I have indicated we'll bring down the security cost by 100 crores. We have achieved much more than that. So this year also you will see that continuing because of the technology-enabled storage system, which I have described in the past. So that innovation has helped us. And in technology use, we have a subsidiary company, a technology company, which has employed around 200 technologists. With that help, we are evolving in the use of new age technology like RPA, artificial intelligence, etc. With that, we continue in reducing our costs. And also, we are planning some back office consolidation of all our businesses and which is done in different places now. So we plan to consolidate all these back office functions over a period. So I feel like this year through that way, use of technology, then back office consolidation, etc., we may be able to bring a considerable saving. Somewhere my expectation will be around this year we may be able to achieve a cost reduction of around 20-30 crores which is an ongoing process to bring down the cost. So we largely use for this new age technology. And also, we plan to have some cost rationalization, replacing the outsourced platforms with our own platform, which we are making it ready, particularly in LOS, LMS, and also the infrastructure management, etc., which can also bring down the cost. So overall, we expect some 20-30 crores this year. Going forward, you will see the benefits, so that the OPEX, hopefully in another 1 year, in gold loan could be brought down to by another 1%.
Understood, sir. Thank you. Thank you very much.
Thank you. The next question is from the line of Shankar Narayan from Deutsche Bank. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So I just wanted to ask, from the period April 1st till today, that is May 14th, in the last 1.5 months, how much disbursements have you made on a consolidated basis in crores, and how much collections have you received in the same period?
Gold approximately it would be around. It is very high. It is around 20,000 crores, because a lot of disbursements are happening around 700 crores. I told you on a same day. Similarly, more or less, an equal amount is coming back also. Because these are done like an overdraft. The volumes are very high.
Okay, and collections, how much in crores?
See, we are able to collect almost all interest in gold loan. So that's why our accrual pre-COVID and to date, there is no much difference as far as gold loan is concerned.
Okay, got it. Fine. Thank you, sir. That's all.
Thank you. The next question from the line of Krishnan PS from India Advisory. Please go ahead.
Thank you very much. I have two queries. I wanted to know if 1% COVID provisioning for microfinance is very conservative. And the second query is, has Manappuram Finance given any corporate guarantees for Ashirwad? And if so, what is the quantum?
So your first question, not question, it's only a compliment, I understand. The second is the corporate guarantee. Manappuram Finance has not given any corporate guarantee to any of our subsidiaries. They borrow on their own strength. They are all AA rated companies by CRISIL, and they are in the priority sector. So in that particular category, they are rated perhaps the highest. So they don't have any liquidity pressure being in the priority sector. They are able to raise their debt on their own.
Okay. Thank you.
Thank you. The next question is from the line of Shweta Daftarkar from Prabhudas Lilladher. Please go ahead.
Thank you, sir, for the opportunity. Congrats on good set of numbers. So as far as Ashirwad Microfinance is concerned, I see the employee expenses have gone up almost 50% Y-on-Y and 20% on sequential basis. So is it that we have ramped up collection infrastructure? How is the scenario on the collection activity, because central meetings must not be happening? If you could throw more light there.
Mr. Raja.
Yeah. What is it you said? What has gone up, you said?
Employee costs.
Okay, employee costs have gone up last year mainly because the number of branches, you added another close to 100 branches last year. And that's one of the reasons the costs have also gone up sequentially. And if you look at the percentage, our OPEX is really the lowest in the industry. We are about less than 5%. The employee cost and admin cost comes under that. So we are much well within the industry. We are actually the industry leaders in the OPEX. On the collection, you're right. The whole industry, the collection of microfinance happens at the place of the borrowers, and that has been since March 24th. As we are not able to do collections, they've been prohibited from meeting people because of most of the states have this Section 144. Nevertheless, what we have done is we have like Ashirvad, for instance, using our 6,000 strong employees, have touched base with 2.4 million customers telephonically, just to ascertain their intention to pay, their intention to take moratorium. And we have also used this period to educate them on the digital collections, which in the industry is much less than even 1% industry-wise, because everybody, their cash collections are all cash basis. So the center meetings are not happening anywhere because it cannot happen. Nevertheless, collections are happening because of the method of collection has changed, and from April 14th onwards, after the first lockdown period, we have started using educating people to deposit in our bank account directly, and now we have got our own app where they can also use this app to pay directly. But center meetings will start only after the May 31st lockdown is lifted, when the normal practice of going to their place and collecting will happen.
So till March 31st, that is during the first lockdown, there have been zilch collections?
Those collections are now treated as advance because that's what RBI says, anything after purchase. We have collected more than 80 to 85% of March collections already. So, but we are treating them as advance because offering moratorium. So when it opens, we will ask the borrowers where they need the moratorium, we will adjust it against the immediate repayment.
Okay. And this 55 crores, I understand it's a pretty conservative number. So does it cover all the forthcoming risk that you perceive in next 1 or 2 quarters, particularly for microfinance, which is highly vulnerable to the current situation?
Our provisioning is again one of the most prudential and conservative. We have a standard provision already of about equivalent amount, about 50 crores or so, 1% on our assets, plus a COVID provision of another 55 crores. So we start off with about 105 crores of opening provision, plus every time, during the year, whatever, our net NPA incidentally is zero. We have provided completely, there's nothing to be provided for on the more than 90 days. That again is not there. We don't carry forward any NPA at all. So we feel this is definitely adequate provision. Going forward, every quarter anyway, we'll review this. But I think we are standing pretty much, quite strong to tackle this as we go forward.
Okay. So secondly, on the gold loan business side, you mentioned 59% LTV, but what is the price per gram?
See, as per the RBI norm, we take a past 30 days trailing average of the price published by Indian Gem and Jewelry Association. Yeah. Currently, it is 2345. Yeah, that is the LTV.
Okay. So secondly, you mentioned in your opening remarks there could be redemptions on gold post lockdown. So would that mean a dip in gold holdings and maybe quarter on quarter slightly slower growth on the gold loan AUM side?
Yeah, we expect some reduction in the collateral during the initial quarter, 1 or 2 quarters. Okay. There could be some reduction.
Okay. So then lastly, you also made remark on the cost of rationalization measures on the Concall book. But if I look at your vehicle finance and housing finance, where we have a chunky set of number of employees, do you see any correction out there?
Yeah, well, I mentioned about the back office consolidation. So many employees in the back end could go for productive work in the field. Yeah. So many employees will be moved to the value zone from the back office. Yeah.
So the 20-30 crores cost correction which you mentioned in value terms by the end of this year, is it on the Concall business?
Yeah, it is on the Concall business through various means. One, Yes, technology, we have our own various platforms developed by our own internal team, which we have tested and found very successful. We have outsourced many functions like infrastructure management by IBM, then LOS, LMS through other agencies, etc. These are costly. So when we compare that and also moving to cloud, so we have assessed there could be a consolidated saving in that to the extent of 20-25 crores annually. This year we may not be able to enjoy that full, but annually that itself would bring a saving of around 20-25 crores. This will be available from the second quarter onwards. That's our expectation. The second half year onwards. That is third quarter onwards. So this year it could be half, but other measures are also there, like back office consolidation in certain areas where people concentration are more. And also more than that, particularly using new age technology. We are bringing down the headcount at the back end and moving them to the front end, which is the value zone.
Sure, sir. That answers. Thank you.
Thank you. The next question from the line of Dhaval Gada from DSP Investment Managers. Please go ahead.
Hi sir. Hope you're doing well. Two questions. First is on the OGL. Given the sort of expectation that you have of further increasing the proportion by 1% per month. So, what is the kind of cost benefit that can come through in the gold business? And would you use this cost to improve the branding and advertisement activity? Is one thought. So that is the first question. The second question is on the vehicle bit. So I'm sorry for just asking it again. But so at the end of the year, we were at about 1350 odd crore of portfolio, and you mentioned that about 300 of this 1350 was two-wheeler portfolio. So just wanted to understand what was the billing in the month of April, and how much was the eventual collection at the month of April. What was the billing in the month of May, and how much have we collected so far in month of May? Just to clarify, excluding moratorium and all other bits, how much is the actual sort of forward flow in the portfolio? Yeah, those are the two questions. Thanks.
Yeah, OGL definitely should bring a lot of cost saving but it will be accrued only in future, because we should have a minimum number of people in the branch. To say our average portfolio per gold loan per branch is around 4.8 crores, nearly 5 crores now. So even if it grows to around 15 crores, we don't need any additional people. So in future, this is going to bring a lot of OPEX saving per branch. So that's the situation. So why 1% of the people are moving by? They understood how beneficial it is. It is they can come and have a free storage of gold. So they get a free storage because we don't charge anything for storage of gold. So they can get a drawing power up to 75% of the LTV. So they can draw at any time from anywhere. Even in cities, we started in a couple of cities, door delivery of gold loan. Whoever wanted to get a gold loan, yes, we go there and do every appraisal, everything, and immediately we disperse this to their through online. So their account will be credited. Yeah, so they can handle from anywhere. So now today, our gold loan is for them 24 hours, 365 days, operable from anywhere. So that is the reason why this is increasing. So we we don't do a very wide publicity, etc., because that is very costly. Rather, we plan to use the digital mode for new various social media, etc., etc. As a cost-saving measure, at the same time, we will be able to reach out to the customer. So our thrust will be more on cost saving. The second question is about CV collection, the billing collection during April and May.
Manage risk in a more efficient way, given that we've had a growth shock and there is a possibility of a little intervention in terms of payment, etc. So any thoughts around how we want to energize collection in this period? Yeah, thanks.
Yeah. See, the whole industry is waiting to see how the performance of the borrowers are going to be in collections after May 31st. So we have not disbursed in the last 2 months. None of the companies have disbursed in the last 2 months. It's only based on our physical interaction with them. Now talking to them over telephone and all that, we are not able to assess their real situation. So after June 1st, we will make an assessment, and the disbursement will definitely start slowly, not as fast as envisaged earlier. And we will by the second quarter, I think we'll be back to the normal rate of disbursement if the collection percentages keep increasing. That's the strategy we have. Plus, on the risk mitigation measures, as the chairman had mentioned, we have moved to, even before this crisis, we had moved to a district level risk portfolio capping. And we will now again, based on this, we will make sure that we don't have an exposure of more than 0.5%, 0.575% in any district. And so in microfinance, it's always, the losses are always localized. It doesn't spread far and wide. So we are having a smaller percentage at district level is going forward is the only answer. The third is of course, inculcating the digital collection and making them more aware. And so that in future, such crises come, demonetization really opened the doors for a disbursement through digital, and 100% disbursement. Ashirwad is doing 100% bank disbursement only from August 17. So we will move more toward a digital collection. These are the lessons I think will be the going forward.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Abhishek Murarka for closing comments.
Yeah, thank you, Margaret, and a big thank you to the management team, Mr. Nankumar and everybody else for allowing us to host the call. Good evening and have a nice day. Keep safe.
Thank you. Bye.
Thank you. Thank you, everyone.
Yeah.
Bye. Bye. Bye.
Thank you. On behalf of IIFL Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.